Hello, my friends. Welcome to the Dime Investor channel. It's me, Iftikhar Chaudhary, back again with a new video. As I promised on my last video, that I'm going to share some of my thoughts about why I'm investing in gold rather than buying physical gold. Why actually I am buying gold mining stock? Because what's the reason behind why I am buying them, and also which company I'm holding. I'm living in UK. From my circumstances, which stock I am buying, UK's gold mining stock I am buying, I feel like I find some value in it. And if after making a position in UK gold mining stock, if I have more allocation, that more fund, maybe I'm buying some other stocks as well, which is from Canada and some other stocks, trying to spread it out, so I'm not investing heavily in one specific area of the world for my mining. So let's go dive in which stock I'm buying from my circumstances, because I'm living in the UK, and which one I feel like is better for me. Okay, let's go dive into the charts and some of the inside thoughts and which one I'm buying and what's the reason behind. Okay, my friends, so we go straight to the chart here. So if I thinking about the gold mining stocks, few metrics actually I'm really focusing on. Those other metrics are most important for me. So if you see this one, these are the point actually I'm thinking about before I investing on that stock. What's the market valuation of the company? Sorry, what's the market condition? Like, is the market is favorable or no? Because of the inflation, I think it is a very good situation and market condition for investing in the gold mines, and so I can save my capital and my investment from the inflation. From the valuation point of view, which mining stock I am buying, why I am buying, is there any value there? Like, is the stock is undervalued or not? So if it is like £10 or $10 worth of stock, am I buying it on $10 or am I buying it cheap? So I have a marginal safety there. So it's not that much. It's not that much like going downward. It more have the upside, plus what is the return of capital invested and cash flow. Are they generating good income in the year or quarter after quarter in a single year? Plus, do they have any present debt? Is it increased by the time each year, or last 5 years or few years? How is it working on? And is it increasing or is it reducing? What's the past performance compared to the market? What the market did? So how much they perform with the other competitive market, plus future performance. What the analyst thinking about them, that they're going to do good in the long run future or no? And did they did any dilution, like for raising fund, or like pay some of their debt, so they have to pay good book? And you can see by the accounting and numbers that it's look very good. They don't have any debt, but they actually increase their share counts, so the stock price gone down. So this factor are really important when you want to invest in a stock that make a big difference in between the other stocks and which one you make buying it. So this these things actually I always try to, if it is tick, then I feel more confident. So possibility and probability of making good return, actually I feel more confident. It's completely my point of view. Plus I also a dividend investor. I love dividend. I think it's a very important things because I'm a long-term investor. I'm not only looking for a huge growth. If I'm holding a stock, if it is a gold mining or any kind of stock I'm investing, if they're paying a dividend, I always like them because while I'm holding it 1 year, 2 year, 3 year, 5 year, 10 year, by the time I'm holding it, I'm also getting some income, passive income. I'm not doing anything. I just looking what they're doing, the market movement, market sentiment. If there is a dip, keep buying them because it's cheaper now. So I like dividend. And plus, I also check if the insider who's like CEO and directors, how much share the holding of that stock. If they're holding a bit good amount of stock, that's good because I feel more confident because they have skin in the game. So they will be more happy if the stock price gone up. So they perform better. I think I have seen like they do perform better and they do more, they're happy and keen to do more good performance because they have their money invested on that stock. So if the stock does good, they make good money as well. I think it's very simple things to thinking about. It's a very simple concept. So, and plus, what's the hedge funds people doing? What's their activity like? They're buying the stock at the moment compared to the market. Are they selling the stock? So, are they reducing their exposure? So, why are they reducing? If they're reducing, why they're buying? If they're buying it, so what's the reason behind? You need to do the fact check, and that make you more like convinced about that stock when you're holding it. If there is an dip, you're not going to be panicking, you're not going to be selling because you already did your homework before you get into the position. And last thing is the insider, who's like CEO, I told you, the directors, shareholders, founder directors. Are they buying or are they selling? There is a reason behind why they're selling, or maybe one or two selling for some reason if they need for their personal reason. But what most of the insider doing, like they have lots of staff who are holding it. So are they all buying or are they all selling? What's going on in their matter? Because they know better than me or you before, because we looking at the numbers and things, but they're working there. They know what they're doing. They know better than us how the company whole doing it. So I prefer to look at that matrix as well to know what's in their thoughts. So I think so I can decide myself that am I doing good or not. So that's a few things I discussed that I always try to look. The more it make me more convinced to buy that stock. So I go with the stocks now, which one I am buying now, because I'm staying in the UK. I live in the UK. So I prefer to buy UK stocks because the reason is two reasons. One is like if I buying a stock, holding for long, and I also wanted to get a dividend. So I'm not paying any extra tax, though I need to pay some tax by the UK government. But if I buy a stock from USA stock exchange, for example, Body Gold, they pay a dividend. For example, Kirkland Gold is from Canada, so they pay dividend as well. So if I buy those stock, what gonna happen? I get a dividend paid by the company, so I need to give a portion of tax cut for the Canadian government. They're going to take a tax cut. US government take a tax cut. Then after what I receive in UK, I have to give another tax to the UK government. So rather than I lose out my passive income, if I buy a stock from UK, so I only give to my UK government what I need to pay to only one government. So I'm not losing out my income. I don't want that. I want to make it bigger, not small. So I prefer to put more my money in the UK stock, though I know the US market is bigger than UK. So I try to look around which is the better bet. So because I found some very good gold mining stock, in my point of view, actually, in my opinion, I'm not a financial advisor. I mentioned it before as well. I'm mentioning it again now as well. So in my point of view, in my analogy, I feel I'm confident to holding them on a bigger position than buying rather than like Canadian and American stock, Nasdaq, from Nasdaq exchange. I still holding some of them because I don't want to put all of my eggs in one basket. So I will spread them all over, but my bigger positions will be in the UK. So the company I want to speak now about is one of the very, very undervalued stock, is Centamin. Centamin is a good mining stock. If I say you just good mining stock, doesn't make any actually thing, because I need to explain why I feel it is good. So if you check the summary, so in here I'm using the Simply Wall Street, so to understand and get all the information as much as possible. So I no need to go deep dive, but sometimes they also don't give you all the information. So in that sense, you have to look around to get the real inside information. Sometimes in even the Simple Wall Street as well don't have the correct information. So you need to look around to analyze that you got the right information or not. So when I'm looking at sentiment, okay, at the beginning I can see the trading is 38.5% below our estimate fair value. So it's actually undervalued 38% at the moment. The earning grew 77% in last 1 year. That's huge. But if you look down, price and news, you're gonna see the sentiment actually been very, very beaten down, completely like bottom at the moment while there was before. So last few years, they lose lots of their value. Why it happened? You can ask why it happened. So actually there's few things happen in there because their mine is not in UK, it's in Egypt. They're also holding some other mines in different country. So their main holding is in Egypt. So they had some like earthquake and stuff. So there was a movement on the soil. So they need to stop the mining process. So they lose lots of money, and because they stopped, so the production gone down. Plus they also went into a to increase the mining life, they've gone through a big like a renovation kind of thing. So the productivity gone better, their price, sustaining price gone better, and so they can make more revenue, and they invested heavily. So actually that's a few reasons their price gone down huge, because their revenue go down because of this all renovation and stuff. Because if you're working, you can't do the mining that time same time. So it was gone really down. It was really undervalued at the moment. So it is like a bottom, you can see. So I love to buy a stock when it is at the bottom, not at the top, because it's more upside there. So if I go to the valuation point, so in here they do all the calculation and stuff for the valuation. By how they do it, so it's by the price to earning ratio, what's the company doing, how they're doing. They also check the price earning growth ratio. They also check the book ratio, and future growth you see here is showing like -17. So some of the things are not. So analysts, big dogs, they think it's not going to grow that much. Okay, I will go on my point of view on that one, what I think and why I think that. So if you check the past performance, actually the thinking is 2021 now here. So they think 2022, 2023, the growth will not be that much. The gold price is going to go down, but my thinking and thoughts are not the same like them. I may be wrong. Okay, so past performance, I'm going to have a look. So when I do something, I need to think about the past performance. I always check the past performance. So you can see here showing like 0.7, though we have seen like they did a very good run. They made a huge revenue. And if you see the chart, last few years, their profit margin was increasing. You see, it was up and down because they didn't go through too many things. And you've seen here their profit margin gone down really bad in 2019-ish, and after 2020 with the price gone up, because the reason is inflation, everything was closed down, the gold price gone up, so the revenue gone up. So at the moment, this is the situation. And if you check the financial health, that's a very important thing. I love to see this one, because if I want to invest in any company, I prefer they have less debt. So if they don't have debt, so they're not struggling, whatever the money they're making, they need to take out the operating cash flow and operating like expenditure, what they need to put in, then the rest of them, it will be like a profit what they're making. So if you see debt to equity ratio, actually they made profit here, but their debt is 0. So they don't have any debt last 5 years. They don't have any debt. So I have a huge confidence with this company management, though the price is really down. You can see they don't have any debt, because if I compare to the other company, you're gonna see every single mining company have a huge debt. And so if I go to the balance sheet, if I deep dive, and they pay a good hefty dividend as well, 6.29, which is not right actually. Okay, so what I'm saying to you is not right. So that's why I say I don't believe everything what they're saying. So I already fact checked what I could, and so which is not right. I'm telling you this one on my knowledge, which is wrong. And if something I feel like I said something wrong here, and I will get back to you as soon as possible. So if so for the checking the dividend, I also use another website. It's Dividend Max. Their information is quite very good, but sometimes they say something also about the company. They think declare this much dividend, but the company changed their mind, and sometimes even this information not always right. So if you check few of the websites like Yahoo Finance and Kokole and Dividend Max and too many websites are seeking out for lots of websites, so you can find the situation, and you can find the yield and what they're saying. So if you check here, you can see like in the Dividend Max is saying only 5.4%, but in Simply Wall Street is showing actually 6.29. So there's a change and difference every single day. You will see this one. And dividend I discuss here, and we also discuss about the financials, what they did. And so we seen the past performance, how they performed from the chart. I'm not taking completely only the 0.71. I'm not taking this one on my account, because the annual growth what they're showing here is not completely right on my sense, because I checked other things as well. So I'm not only want to share you the good things, I want to share you the bad things as well, if I can find something at the moment. So the management and ownership. So I check the ownership at the moment. So how much the insider holding the stock. So if you check in here, you can see the insiders are buying these stocks like crazy. So they sold like 200,000 shares 9 to 12 months before. It's been quite a long time before. If I go more inside, you can see this one. So somebody sold it, actually only one individual sold it, and it's at 1st of September last year. And after, you can see these all people, they're all insiders. They keep buying. Chairman of the board, CEO. So 100,000 stocks bought by one of the chairman of the board. And you can see the price as well, which price they bought, 105, 105, 103, 104. So they're confident to buying that stock on that price. So if they're confident, make me confident as well. So even the last March, they bought some as well stocks of this company. So I feel like their convictions is really good. So individual insiders actually holding 0.5% of the company. Private companies are holding 0.9. So some of the private company holding is, besides the public like me and you, if you buy it, invest on it. So we're holding like 22% by the metrics. But you see the institution, big dogs, hedge funds holding the most, 76%. So let's see what they're doing. So if you go here in the chart, you can find out actually how they're doing, and you can see the hedge fund, they did not sold any, actually only the BlackRock sold some of them in 28th of February. So my guess is like maybe they sold it because possibly, I'm not sure, maybe the price or they want to reduce their exposure, or maybe in their allocation about like 1% or 0.5% or 5%. What is their plan? Maybe they need to sell some of it to keep in their target. So they're still holding one of the biggest chunk, 8.29% of the stock. So yeah, and you see nobody else selling it, rather than buying it, like you can see 2,000%, 12%, 1%, 21%. So most of the people are holding it because that's really good value in here. So plus, if I check, actually, there's one more matrix actually I check. It is not always work, but I still make me feel a bit better, because you see the growth of their employees. So if the company is doing good, they try to scale the company. They try to scale their productivity. Mining is a manual work, too many things to do, though that use lots of heavy machineries, but still then hire more people, and you see that growth is going very well. So that's why I'm really confident about the sentiment, because it's undervalued. Lots of other metrics comparison, it tick lots of all of my facts, then that's why I'm confident. So now I'm going to another stock, which is also in the UK stock market, and that's the name of the company is Polymetal. I want to discuss about. They're doing very good. If you check this one in here, there's no flex. It's very good. They have a good valuation, they have a good dividend, they have a good health, and had a huge good past as well performance. So in here, if you check the reward actually, so okay, if you want to know about the company is mining in Russia, Kazakhstan, East Asia, Europe, and some other places is all here. They not only mine gold, they also process silver, copper, zinc, platinum, and group metals. Okay, so they are headquartered at the moment in Russia, but it's also trading on UK stock market. So I'm confident, because I don't need to pay taxes to Russia as well. I'm paying tax only in UK. So you can see here, the trading at 73% below our estimate fair value. So the fair value, what it should be, is trading on 73% sale. What is that much sale in the market? There's a reason behind. I'm going to that. Earning forecast grow 9.1 per year. That's what the forecast saying. And earning grew last year is 118%. So that's the past performance. They have a huge high level of debt, unstable dividend track record. That's the reason the price of the stock is down. So let's go inside the valuation and price movement. If you check last 5 years, how they did, okay, the price are not like the bottom. The price are not at the bottom like sentiment. They are pricing like average last 5 years metrics. If you see on the chart, they are not at the bottom. So, but they're still undervalued. Okay, if I check what the people made in last 5 years, okay, you can see in the last 5 year shareholder returns in this chart, you can see without the dividend, last 1 year, they didn't make that much money, showing minus 22%. Last 3 years, 131%. Last 5 years, 31%. Not very well. But with the dividend, you can see the matrix is changing now. So last 1 year, the price gone really down because of the debt. 3 years, they made a good amount of profit, 170%. 5 year return is 66%. So if I need to catch a company, which one gives me return 10% or more, that's my target. So 5 year, if they give me 50% return, I'm happy with that. But in Polymetal did 66% return, and because of the market condition, we are in kind of inflation situation here because of lots of money printing by the government. They had no other options. I'm not blaming the government. They need to balance the market. We are the investors, small investor, big investor, everyone, we need to catch up with the things, how the market is moving forward. So we need to predict that one if we can. Nobody can predict the market. We just try to do our homework, and if we can take some necessary steps, and maybe then we will get the reward. So that's the return for the last 5 years. Okay, so now I go for the valuation point of view. So I told you like valuation was really undervalued. You can see here 73% undervalued. So the fair value should be £57. At the moment it is trading only £15, which is really cheap. Why cheap? Because of that. I'm going to that. Okay. So if you buy this stock now at £15, if you're holding it for 5 years, you get a good dividend. And if you're holding the stock 1 or 3 years, the price maybe will be stable, and the undervaluation, what we are seeing now, market will catch up the price. If the market catch up the price, you can see you will make like 3 or 5 times more what you invested. So if you buy it £15 or £15.50, if it catch up to 55, you just 3 times you made your money. In 3 years, maybe you make your money 3 times. So that's the catch. But so future growth, excuse me. So on the valuation, actually, how they did this one, the valuation, they did this one because I need to show you, because to make you confident. So if you see the price to earning ratio, yeah, it's 9.4, the industry doing 9.4, the whole market doing 23%, 23.4, no percent, sorry, but they're doing very good with their competitive market. And the price earning growth is okay, it's nothing significant, but you can see the price to book ratio, the company book ratio is a bit overvalued, showing here. Okay, so future growth is showing 9%, but you know the sentiment, they didn't show it, so it should be 5%, 9% should be, they showed it really less than 9%. So the future growth is better on polymetal, what we can see here. So if we check more other things like forecast of earning, what they did in 1 year, the whole industry was minus 10%, but the polymetal did 9% growth. Okay, and they forecasting that the annual growth will be for future will be less. If the industry gonna do less, like 4%, but polymetal still is gonna make 4%. So it's a good things to see. There's more things that actually analysts don't agree. So they say the revenue forecast will be slower than 20%. I'm okay with what they're making at the moment. That's fine for me. Okay, so return on equity, that's the very important thing to know about. How much money they invested in the equity and how much return they're getting. If you check this one on polymetal, that's why I get more convinced, because the return on equity is 36.4, extreme. But compared to the other industries, other mining stock, they're doing only 17. So polymetal doing like double than other. Past performance, if you see, is 25%. So they did really well. The performance is very good. If you see the chart, 2018, 19 is slowly keep going up. Profit margin at the moment, 37%. They're making good money. They're making good profit. So how is the cash flow? How is everything, the rest of the things are doing? You can see last 1 year, polymetal earning growth was 118%, while the other similar type of company in the same industry did 63%, and they did like nearly double. So their performance is really good at the moment. So I need to think about it. And also I'm comparing with the other companies as well of the industry, so I'll have a bit idea like is it just everyone did well so they did well as well, or it is just no, they did something differently so they did better than other competitive mining stocks. So last 5 years, if you calculate, the polymetal steel earning growth was 25%, industry did 22%, market did only 8%. So polymetal's last 5 years earning growth was really good, better than others. But I'm not saying the last earning is gonna like is gonna happen in the future as well. But you can think and you can do your fact checks. Maybe you can have the confidence that maybe they're not gonna do 25% next year. I'm not saying they need to do 118. I hope they do 20%, 15%. That's still good. They're making it. Return on equity. So that's the ROE. that's the very one of the very important thing. I really love to see this one. It is 54% return on equity. Outstanding. No words. Return on asset, 25.8%. Return on capital employed, 38.8%. So you see the numbers are really good. Financial health. Okay, we go to the debt now. So they have a good amount of debt. Because of that reason, the stock is undervalued. People thinking because they have lots of debt, so they're not doing that much good. But behind this one, they're doing some improvement and they rebalancing their balance sheet. They're increasing their positions, they're making good money, and they also put this money back to work for them. Since they're growing, and they also did very well every single quarter. So though they have their debt, but they use it, I feel like my point of view that they are utilizing their debt sensibly. So their profit is increasing and they're doing good quarter after quarter. So they are like a growth company. They have the debt, but they're using their debt. That's my analogy. But I can be wrong. It's completely my opinion. I'm not a financial advisor. I'm mentioning again because I'm just explaining and sharing you my thoughts, that what I'm thinking. So it's my point of view. That's what I'm thinking, because that's what the number is saying. If you check here, reducing debt, polymetal debt to equity ratio has reduced 274% to 86% over the past 5 years. So you can see they had debt. They're reducing their debt every year. Last 5 years, it was 274. So people was like, oh my God, they have huge debt. Everybody just keeps selling the stock, the price goes down and nobody buying it because they have debt. Still they have debt. But if you check, 5 years before it was 274%, but now today have 86%. And their revenue gone higher, their profit margin gone higher, return on equity was very good, everything working very well, outstanding. So the debt is just a matter of time, they will pay it out. You see that now we check the debt coverage. Do they have enough money to cover the debt? Because they have debt, so I need to think about it. I don't want to ignore it. So Polymetal's debt is well covered by operating cash flow, 68.6%. It's huge. So it's covered. So they're not in a position that, okay, their cash flow is less, so they can't pay their debt, or they can't pay the amount they need to pay to the bank, or where they take the debt. So I have a good confidence that everything goes well. It is a good time to buy now and holding it for a long time. So that's my approach. So if you go to the balance sheet, you can see what's their debt, how much they have got here, equity, how much they have, how much cash, short-term, what they have holding, and that's the thing. So I do check this one. There's nothing significant that I can explain. The dividend is 5.98%, though it's showing here. I double check with the dividend max, they're showing like 6.9. So you can see that simply one says on the perfect, though it's not a free. I had to pay for those information. I subscribe with them. But even though the dividend max is free, so if you want to dig in, you check in few websites, you can find the information. You just need to double check before you get into a conclusion. So in here, the showing today, dividend yield is 6.9%. Okay, so that's the Polymetal dividend rate. At the moment, it's not 6, it's more than 6. So buying a stock undervalued, it have more upside, have less downside. I have a marginal safety. So I'm going every single point. I got a dividend when I'm waiting for the stock. The stock cash flow is very good, and that is well covered. So and now what's left is what the inside are doing. Let's see. Okay, they have a stable growth, you can see, and the payout ratio is showing 56% at the moment, and it's gonna go 74% later on, but it's about the future. I will keep an eye on that one, but I think we will still make a good profit on this one if you're holding it for long. So CEO compensation is quite all right, not to like compared to the market is fine, so I'm okay with that one. And CEO also holding like 0.7% of the company ownership, and plus the financial officer, he's holding as well. So some insider also holding the stocks. Let's see, are they buying or they selling? You can see here, they're buying because they know. So if you see individuals of the insider, lead director, he bought the stocks 27th of April. It's not too far, this year, April. And there's a lead director as well. There's chairman of the board, and there's a lead director as well, the same guy actually. But he keep buying. He keep buying. You see, they keep buying. So one person sold it, this guy in here on September 20th last year. So he may sold because he feel like it for some reason, I don't know. So only one person is sold one position. It was 1700, but you can see more buying going on in there. So I feel it's okay for me. I'm happy what I'm seeing with that one, that much buying. So private companies holding 2.6%, and some of them VC and PE firms holding 7.3%. Individual insiders who is managing the company, they have 10% stake. Is bigger than the sentiment. Yeah. General public like me and you, if I hold some of the stocks, so it's like 39%. The institutions also holding the 39%. There's one of the good things here. Institutions are not holding a big number. So if they sell out, there will be not that much drop of the market. But other individuals holding the bigger portion of the stock, that's another good things when I see in this matrix. And you see there was no dilution, so they did not though they have debt, they didn't dilute the stock. They managed that debt and utilizing it properly and increasing their productivity and revenue. I like that one. So what's the top shareholder, big dog, hedge fund, what they're doing? You can see only one big sell off on this PPF capital management. I was thinking, raising my eyebrows, what's going on. It was 2nd of March. So that's the biggest one. So maybe they found more better deal on the market. But I'll still have a look. What's the other people doing? Nobody, because first top 8-10 investors, big dogs, who need to look around what they're doing. BlackRock, they don't do anything. They're holding the 5% stake. ICT holding the 7% stake. They didn't sell anything. They're holding 3.8%. They reduced like 41%. That's huge actually. Their portfolio is like 95% on this one. So I have no clue about this one, honestly. I don't want to give you anything that I don't know. I will say straightforward the truth. I don't know this one. Okay, the Vanguard increased their position, and some other, you can see they increased their positions, and most of others holding. And who reduced the position? It was minimum, except the only one. And you also see like bottom, they increase their positions. There's some individual chief executive officer, CEO. Yeah, that's the important thing. CEO, what he doing? He increased his position on the date 7th April 21. This year, April, he increased his position. He's the guy of inside. What the inside are doing is very important for me. Okay, and other metrics, you can see there's a bit like up and down. So they used to have 2018 12k-ish employer. It was go down 11.3. It was 12k. It is 12k, 12.1. Okay, I think it's not a big difference here. 12 to 3, 12.3 to 12 at the moment. So hopefully it's okay. So that's my things and thoughts about these two gold mining stocks. So I hope in this video I try to make it short, but I need to explain to you guys. So maybe this is a bit long video. I'm not gonna talk more and make it more. But I will say you one more things. If you want to know before you invest, do your own due diligence. If you want to know about this company, you just Google it, okay? And if you just write down here, like a sentiment news on Google, it's very simple. You just Google it and you can find lots of news coming up. You can check what they're doing, what the news coming. There's lots of positive news in here. If you check about the polymetal news, it's a similar kind of thing. Just Google it and you can find lots of information. The Yahoo Finance, stock market, why you don't need to pay for this one. You can find the information, you can read those things. You can do your homework, and if you feel confident and so you take your decisions and make your positions, is up to you completely. So I'm holding this two, I'm buying this two as much as possible. I'm a small investor and I'm just nibbling in every week, £10, £20, £50, £100, whatever I can. And I'm trying to increase the position when there is a dip. If it is going up, I'm just trying to wait a bit. And if any dip more coming in the future, I'm going to keep buying it and holding it for long. So that's all for today, my friends. I would say to you guys that thank you very much for being with me, and I'm really appreciate that if you're still watching. I would ask you, please smash the like button. And I'm new. I'm trying my best to improve myself in every way, but I need a bit time. I'm not very handsome. I don't have any posh studio as well. I'm just with all limitations I have, I'm trying to give the information what I know, what I'm doing. So if you smash the like button and if you drop a comment and if you subscribe, I'll really appreciate. Thank you very much. I'll see you in the next video. Thank you. Bye for today.